like we were having a good week until yesterday. We gave back a little yesterday. If we can get back about, at least a half to a third of what we lost yesterday, I think we'll have a good week.
I asked because I know some people think it was a bumpy week. I do have a little bit of stats just to kind of put it in perspective. 1%, 2%, 3% down days. This year, we've only had 20, and I say only 20 because I'll explain why in a second. We've had 21% down days. We've had 2% down day. We've had no 3% down days. And in comparison, last year, we had 41% down days, 2% down days, and 3% down days, right? So I know a lot of people think the last couple of days have been a little rocky, but just to put it in perspective, this is only the 20th 1% down day versus the 40 we had last year. So that being the case, I got 3 questions. One of them, 3 are separate questions. The first one is, how do you decide how to scale into trades at this point in time, right? We could pull up the platform, Tone. Let's look, because there's a bunch of ideas right about now.
That's a question, Jamal, that we received yesterday. We talked about it on Confirm and Send yesterday morning, and Tony and I also talked about it at some point during the day yesterday, because when you get a pop in volatility, on the first pop in vol, you can't go all in. So Tony and I talked about this, like how much are you going to push in? Are you going to push in 10%? Like I pushed in about 10% yesterday.
Yeah, I can see that. You only have about 10% to push in. But go ahead.
No, I'm saying I pushed in about 10% yesterday. I just felt like you got to do something, right?
Yeah. 10% of your capital.
Yeah. I a little less actually. In the end of the day, it was a little bit less because it took some stuff. But let me look at my capital right here. Yeah, we basically at the end of the day, it looks like 6.5% more. I was using 6.5% more capital today than I was using yesterday. Total.
Right, because that's the fear, right? Like some people are just like, oh, this is a great time, and they jump in. But there's other people who are probably it's hard for you to convince them to do the 6% because they're thinking, sure, SPY is 25 IVR right now, but it could be 25 on the way to 34, right? And even though that's not that's a hard thing to do. You can't always assume you're going to get the top involved, but some people could be looking at it in that way. But there's a lot of different ideas out there right now, right? And so that's the reason why for the question.
You just mentioned SPY volatility or IVR, and I'm going to look at IVR too. And if you look here on the bottom, you'll see that this 25 number, yes, it's been higher. Obviously, it's been significantly lower, but this is typically the higher end of the range. If you throw out the highs, you throw out the lows. This is high in IV rank for SPY.
Yeah, absolutely. I agree. So that being the case, why only 6 to 10%?
Well, for exactly what you just said. I mean, you never know when high it goes higher, right?
right. You never know when high goes higher. That's the thing. Well, let's look at let's pull up the platform one more time because I'm curious. I know you guys don't trade them. I always used to, at least not right now, right? I know the diplomatic answer, but to be honest, there was a point in time where, let's say CART, for example, let's pull up CART. New IPOs, right? And these are very liquid IPOs. So these guys actually got options fairly fast. So let's say they've only this has been only been trading 4 days, but has options already.
Sure,
and liquid options too. From what I remember, I mean, at least not. I don't know. This is not indicative of their markets. I think it's just because it's closed. Their markets are actually a little more liquid than this one.
They're a little tighter, but open interest is good, not great. But they do have $half wide strikes, which is really nice. It makes it a lot more tradable. I think the shorter term options are actually getting a lot more play, as you can see here by the open interest, than the 45-day or monthly option. So yeah, CART's going to be a tradable. Listen, it's a $30 product with good implied volatility relative. You look here, you've got 80-90% implied volatility. We just looked at SPY, it's a 15 volatility. So you got a $30 product, smaller product, high implied volatility means good movement. Good movement means opportunity. It's a good tradable product. It's something we needed.
I actually agree with you because one of the things that I would do in this case, and I'm sure some people have looked at this to trade, I would compare it to DoorDash, right? Door, right, is a name is it Door? I think it's Door. right? OOR.
I thought it was dash.
Oh, dash.
Yeah.
That's what it is, yeah. This is a comparable name in a way.
Mhm.
You can just look at the implied vol between the two, right? And you just said a little while ago, implied vol in card is 90, whereas I think in here it's like 40 something.
Yeah, 45. It's cut in half. It's half. So you
right?
Go ahead.
No, go ahead. You go ahead.
Oh, you're making a good argument here. If you're going to compare the two as being comparable to each other, you might say that dash at 45 means that cart might be a little bit elevated. It's going to be elevated because it's a new product. We talked about it, market makers. You always set it higher and watch it come in as volatility. As more players come and the market gets more mature, it drifts lower. So yeah, you might have a good opportunity in cart to sell volatility. You're right.
Exactly. Yeah. I mean, it's one of those things. I'm not trying to get anybody to trade it. I mean, it's new name. Obviously, it's nicer to wait for more data. But it is a comparable thing, and you can at least have another name to look at. This is something I know I used to do when I was learning to trade, whatever. We were trading new names sometimes. If you have a possible name to look at and compare it to, it's one way to do it. You know what I mean?
Yep, for sure.
So I guess honestly, I mean, and it was a kind of a question. How often do you guys ever look at names like this anymore? Do you ever trade them? This ARM is another one. Obviously, it's a tech name. There's comparables. What do you think?
Well, for me, if I'm looking at trading the market, if the market hadn't done what it's been doing, volatility expanding, Nvidia down $10, Apple holding in there yesterday when the market was selling off, I might have looked at ARM and CART to do something. But if I'm going to put money to work right now with volatility expanding /VX the way it has been, I'm going to go to the liquidity of the bigger names, the Metas, the Tom mentions China a lot, Baba, the Baidus, that kind of thing. And ARM and CART will be secondary.
I think new issues, if it's a dull market and like there's nothing to do, like 2 days ago when ARM first came out, and you just want to mess around and test the vol levels they set, then the trade's fine. I did like yesterday when there's actually
you did that.
I know. So I'm saying a day like yesterday when there's actually stuff to do because IV's popping all over the place. I'm not wasting time on ARM and CART.
That's right. Same.
Word. That means okay, Tom, for the hip people. Last question.
I need a glossary.
Last question. 2s and 10s. Is this a good time to take off the spread? A little bit or so.
Take off the spread?
Yeah, it's 60 basis points. We've reached this level a couple of times, and then we've gone back more.
Dude, this is what we call day one.
Day one on the way to zero, huh? Okay.
Yeah, I mean, like, how long? We're going to kick ourselves at some point. Maybe it's 2 months from now. Maybe it's 2 years from now. But at some point in what I think is going to be the relatively near future, we are going to kick ourselves for saying how even at 50, 60, 40 basis points, this thing is going to go to be uninverted at some point.
Yeah, that's when at some point.
I don't care.
Before these, I'm on your side, Jamal. Before these last couple of days, you could have said that for the last year, Thomas. Because
I understand that, Tony. But here's the difference. So if you told me at some point volatility is going to go higher, if you said to me, Tom, at some point volatility is going to go higher, I would be like,
long volatility.
I would go, well, we'll be long volatility, right? So we're just going to go out and buy buckets of volatility, but it costs a crazy amount of money to buy buckets of volatility. So I can't afford to do it. Nobody can afford to wait for volatility to rally. It's impossible to do. It costs too much money. Mm-hmm. But if you said the yield curve is going to at some point go back to to uninvert, we'd go, great.
More normalized curve.
Why wouldn't I buy it? And does it cost any money to hold it? And the answer is no.
Only price, right? Price movement.
Right. So there's price principal risk, but there's no carry costs. So I'm like, fine, I'll just hold this forever. I don't really give a crap.
You make a good point. Much like when Dr. Jim and Anton were making their points against you and Jacob.
Oh, don't be a little, what do you call it? Sissy Mary? Don't try your little crap.
I've been thoroughly entertained. That's all I got.
Good. It's probably a good time to take a break and catch the opening. Jamal, thank you so much for this week in stocks. We're going to take a quick 90-second break and come back. We got more Tasty Live after this, but the opening bell sounds off. The moment you've been waiting for.
Hey, yo.